And welcome back to the Pulse. You are joined here by the PeakBot team. I'm Dillon, joined by, we're excited for another week of all things options here, from exploration to automation. Thank you guys for joining. We got a relatively standard agenda today. Of course, we're going to take a look at some charts and our watch list for the wheel strategy. We're going to take a closer look at my portfolio. We're going to have some updates for you guys on the PeakBot picks competition for April. Talk a little bit more about our trend spread bot. For those of you who aren't familiar, our trend spread bot is our newest automated strategy for option selling. And we're going to get some good news there. And maybe a couple other things along the way. Of course, we encourage anybody in the audience, if you have questions, ask us live. We're here. This is live. We're doing it. Put your questions in the comments. If you don't want your question to be answered live for any reason, then text us. There's a number on screen. That's our business line. You can text or call us there at any time. Obviously, also, to get it out of the way, we are not financial advisors. None of this is financial advice. And if you have interest in getting started with PeakBot and automating your portfolio and you want more of a live demo, there's also a link down here at the bottom. You're going to get one of us, most likely me. I don't know if that's good news or bad news, but I'm here. So, fellas, anything I missed? If not, I think we can get into it, Ben. Maybe.
Yeah, before we dive in, I just want to mention that last week we had over 1,000 viewers on Twitter. So feel free to share this with your friends. We want to try to break the record that we had last week. I think it was like 1,200 viewers at a single time on Twitter. So let's get this shared. Let's get some interaction going. We're happy to answer all questions that come through the chat. Additionally, myself, Dillon, and Thomas were at a trading event in New York City over the weekend. Fantastic trading event, really got us thinking about some new strategies that we could automate. And it also talked about portfolio diversification in terms of what are the different securities that you might want to consider trading throughout your portfolio. And what I mean by that is how much do you want in stocks, how much do you want in options, how much do you want in futures, and maybe you don't trade all of those different types of securities. And we focus specifically on options, but I think the same goes for, how you're trading those and how you're using your capital, right? Like there's a certain amount that you could manually purchase and kind of just let sit there and let it do its thing. There's a certain amount that you could, manually and actively manage yourself. And I do think that there should be a portion of your portfolio that's, actively managed, but in an automated fashion. And that's where PeakBot slots in. It's not meant to be your entire portfolio, but it is meant to be a supplement to what your current trading strategy is. And I think that if you kind of view automation tools, because there will be more and more, we're kind of on the first wave of real automation tools hitting the trading industry, for the retail trader. Only as time goes on, there's going to be more and more automations to choose from. It's better to get used to implementing automations as a overall component of your trading strategy sooner rather than later, in my opinion. I don't know, guys, you have any thoughts on that?
I think it's a good opinion. I agree. As Ben mentioned, right, we're kind of riding this first wave for trusted, automated, or algorithmic trading platforms, specifically in the world of options and equities trading. Again, there's a lot of crypto bots out there, a lot of Forex, but for the boring old stocks and options, get in there, get your money off the bench and start automating a percentage of your portfolio. So, no, I think that's it. Unless Thomas had anything, I think let's get into the watch list this week for the wheel strategy. And let's look at some charts. So I'll kick it to you again.
All right. I will pull up my screen here. And we've got this watch list. You guys could find this watch list if you go to usepeakbot.com/watch lists. We've got our, I'll scroll up here. We've got our wheel hedged watch list. This is what we normally talk about. And this shows all of the different premiums that you can earn, as well as your maximum loss for these spreads that we're setting up. And again, we're setting up these spreads on a weekly basis. We also have the unhedged version of the wheel. That's just selling cash secured puts and covered calls on a weekly basis. And then we've got this removed list, and this is all the tickers that don't make it onto the watch list but are still tradable. And they might not make it on because A, they're too risky, or B, they're just not paying out enough premium to where it makes sense to trade it. Then, of course, we have our Iron Condor strategy. We will give a little bit of an update to our Iron Condor strategy at the end of the show because there are some updates coming. I'm excited about the updates. I've been trading the updated strategy manually for the last month or so, 2 months, seeing some fantastic results. So really excited to get that pushed out sooner rather than later. If you are currently a PeakBot subscriber and you are using the Iron Condor strategy, you're going to love this. It's going to be great. So one thing that stuck out to me as I pulled open the watch list this morning, and guys, this watch list is updating every hour on the hour. We've got a timestamp here on when it updates. The time is in GMT. We do have an international audience. So decided to go with whatever that midpoint is in terms of time. JD's been at the top of the watch list, ticker JD, and now it's not. It was a lower risk, bullish ticker, paying out in this group at least the highest amount of premium. So I came on this morning. I was like, "Whoa, what happened to JD?" Check this out. JD has found itself into the high risk tranche here. That's interesting. So it went from low risk to high risk in 1 weekend. The one thing that makes me think of is, maybe there's an upcoming expected event that's going to happen that's going to potentially move the stock price. There's a ton of different factors that could be factored into volatility here, which could potentially make the risk a little bit larger than normal. So still on the tradable watch list, it has found itself into the high risk category. But as you do see here, if you are going to trade these high risk stocks, there's some other options that are paying out higher premiums. So if you do want to take those risks, check that part of the watch list out. Otherwise, I personally like to stay into the moderate to lower risk tranches here and trade off of those. I just personally feel more comfortable with them. You also want to consider your max loss, right? If you can stomach the max loss and you want to go higher risk, go for it, right? Of course, all opinion, not financial advice. You do what makes you comfortable. Another note to point out is we are headed into earnings season. And you can find which stocks are expected to report earnings in the near term meaning within the next week or so. If you see this blue flag on the watch list, that means that there are upcoming earnings. And of course, we've got the date that earnings are expected to come out. So keep an eye out for earnings. Earnings will change I'll call it normal characteristics of an option. There'll be higher implied volatility just because usually with earnings, we see bigger price swings than just a normal day of trading. So keep an eye out whenever trading anything earnings. That could be, you could be putting yourself into a situation you might not want to be in. So Thomas, I've got some stocks ready to go here to look at some charts. I want to know, is there anything that you're interested in looking at, or is there anything that you're personally trading this week that we should pull up?
Yeah, one I just added was Intel to the last Thursday. Intel. It should be on there.
That's ticker INTC, right?
Yeah.
All right, it's not popping up here. I'm going to go to the unhedged list.
Yeah, it usually pays a little bit of a lower premium, so it might not be up.
There we go. So Intel, in a bearish trend, so maybe not the best for selling cash secured puts at the moment. It's lower risk. You do need quite a bit of cash secured in order to place this trade, and you could be earning about $15 in premium. So overall, that's about 0.5% gain on the week, and in premium at least. Honestly, not too bad. Happy to pull up. You have JD here. I'm going to just pull up Intel real quick. Take a look at this chart. take a look at the 1 month. And yeah, it looks like this is in a bearish trend. So Thomas, are you trading this on wheel or on trend spread?
I just added to trend spread, but I also did decide to repurchase some more Intel in my personal portfolio. I think we're getting close to a bottom here. So I think pretty soon that bearish is going to turn bullish, not financial.
Yeah, I mean, we are trading very near the 1 month low. If we look at the 3 month here, we're at the 3 month low, and at the 6 month, we're not quite at the 6 month low, but we are approaching that range. If we look at the strike that we're estimating that we're going to sell, it's a $34 strike on the put side at least. So the price would need to drop down to $34 here by the end of the week, which is the day of expiration. And that will potentially, if the price does drop below $34, then we will get assigned shares of Intel, and then you'll go ahead and start selling covered calls on this. If we look at the technical analysis tool, switch this to a week, we've got 15 sell signals versus 10 neutral and 1 buy. So all signs are pointing to a downtrend here, a bearish trend. So keep your eye out for that. If you are trading the wheel, probably going to want to start with a bullish trending stock on the put side before going into any sort of neutral or bearish stocks. There's plenty to choose from on this watch list.
Not financial advice.
Not financial advice. Looks like I got locked out of these 2 tabs. Great. I did want to bring up Carvana because Dillon, correct me if I'm wrong. Were you trading Carvana recently?
So I have Carvana on my trend spread bot in beta right now. So trading with the trend there. I'm actually going to pull up the position on my phone to see how it's been performing. Overall, I am, let's see. I've been collecting premium on it for the last 2 to 3 weeks. We're rolling out my contract. So right now my expiration is on the 19th, this Friday, which will boot out again. But my strike prices are 71 and 65.
So your sold is $71.
My sold put strike is $71,
wow.
which I believe I'm doing okay on with that, right? I mean, what's it trading at, 75?
Yeah, I mean, it doesn't look like Carvana's been at $71 in at least a month and a half or so.
Digging it.
So yeah, I mean, it does look like we're in a bearish downtrend here. If we look at the past couple of weeks, but overall, we'd have to see, somewhat of a significant drop in Carvana this week. Any idea when Carvana is reporting earnings? I don't know if I know off the top of my head, but earnings are coming up.
They're at the top of the removed list. Their last one was 222, so I'd imagine maybe not for just a little while.
Yeah, maybe another month or so.
Yeah. So again, just a reminder: if you're trying to find Carvana on our wheel watch list and you're not seeing it, it's because it's in the removed tab. Still tradable stocks, but as Ben mentioned earlier, higher risk stocks as well as stocks paying under $10 in premium are on there. Carvana's at the top of the list with currently on the put side, put spread, $7 spread right now. With the sold strike at 71 and the bought strike at 64. So I just figured I'd put that in there.
Yeah, not bad. Are you having any problems hearing me? My computer is pretty choppy right now.
I can hear Thomas, you tell me I can hear you great. You're frozen.
Oh, I'm frozen.
You don't look silly. There's not either. Yeah, you don't have a silly face or anything, but you are.
That's good.
You're back.
It's back.
I'm back.
So yeah, I am trading Carvana, but I'm not. I'm utilizing the trend spread bot. Just as that's where I'm okay rolling the dice a little bit, right? It's like, okay, yes, Carvana's a more volatile stock. It has a wider spread. Mm-hmm. Let me put that on trend spread because I know I'm going to avoid the shares. I'm just going to collect a nice premium every week, and that's what I'm doing.
Yeah, I mean that's the great thing about trend spread, and we're going to be releasing a watch list for trend spread. I'll probably work on that sometime this week, but we'll be releasing a watch list for trend spread. And really, I mean, the great part about it, as you mentioned, Dillon, is you're not going to get assigned shares. Now, you will take more and faster realized losses. That's okay, because the name of the game, as we know, is collecting premium. If we're selling the 30 delta, statistically, we have a 70% chance of winning. And if you play that out over a long period of time, that 70% of wins is going to hold true. Again, like I mentioned, we went to a trading conference in New York City, myself, Dillon, and Thomas, over this past weekend. And, they mentioned, hey, if you get into a couple of positions, say you get into 5 positions, let's call them a 50-50 chance of profitability. That's like flipping 5 coins, right? If you got a 50-50 chance. Now, if you're just flipping 5 coins, all of them could be tails, right? And if you guessed heads, you might lose on every single one of them. But if you increase your sample size, if you increase the amount of trades that you make over a period of time, I don't think we have to convince anybody of this, but over time, if you flipped, 500 coins instead of 5, you're probably going to see a more even split between heads and tails, probably pretty dang close to 50-50. So that's kind of like how options trading works, right? We know what the statistical probability is of making a certain trade, but after you make enough trades over a certain amount of time, those shorter term swings, will get flattened, and then you'll realize the true, statistical win percentage over a lot of trades over a longer period of time. So it's all about consistency, and PeakBot makes it really easy to be consistent because you could just set these trades up and let them run.
And time in the market,
Yeah.
It's why we try to tell people, look, with your 2-week free trial, like Ben mentioned with the coin toss analogy, you might your first 5 trades might suck. You might just be wrong on the first 5, but make 500 trades, and we're going to return to the mean, right? We're going to get back to that average of, it's doing what it's supposed to do. It's math based. That's why actually at this event, a lot of engineers, a lot of math background, science background, they love trading options.
Yep.
Because they can trust that what is supposed to happen on paper over time with enough volume of trades, it will happen. If you're selling the 30 delta and you should win 7 out of 10 trades, then you're going to eventually have that win rate. So then it comes down to being smart about your stock picks and being diverse as well. So fantastic. What else we got here?
In terms of charts, I mean, Dillon, is there anything on your watch list this week that you wanted to
Yeah,
bring up?
sure. You know what? You mentioned JD.
Yep.
I'm actually got assigned on JD. So, and it wasn't last week. I've held JD shares. I was just selling one contract on it, one spread. And I've got assigned shares 2 weeks ago. So I held them last week, sold a call spread on it. They did not get assigned, meaning I didn't get the shares sold away. So I'm holding them again this week. So I'd imagine that my strikes would probably be something like 25, 50, 27.
Yep.
So yeah, right now I own them at, let's see, my market value is 25.92. My cost per share 26.18. So that's kind of where I'm at.
So if you're selling the 25.50 strike, it looks like you're set up to collect about $39 in premium this week per contract. Not too bad. You might be taking a small hit depending on what your adjusted cost basis is. But, if you got the shares and you want to wheel it out all the way, it's paying out a nice premium. So not terrible. And then in terms of probability of getting assigned, right? We're on the call side, we're selling the 50 delta. So statistically, you're going to get those shares called away 50% of the time. If we look at the chart, we've got JD trending, and it's been pretty choppy, honestly. Over the past, it looks like, I don't know. hard to determine a trend by just looking at this, but overall, we do see a drop in price. So potential for JD to keep trending down, but you're going to keep collecting premiums along the way. It looks like pre-market, we're up pretty high here. It looks like we're approaching where this gap was. So we'll see if JD actually goes and fills the gap this week or not, or if it just bounces off this as a resistance line and then continues to kind of just sputter out in price. The technical analysis tool here, click one day, is indicating a sell signal. So overall, a little bit bearish. But, if we're, I kind of look at this as a tie. We've got 13 sell signals. We got 8 neutral and 5 buy. The wheel strategy is a neutral to, at least on the put side, a neutral to bullish strategy. On the call side, it's also a neutral to bearish strategy. So the neutral really plays to our favor here. We can afford for the stock price to move against our favor for just a small amount of time. But yeah, overall, I mean, not bad based on the premium that JD's paying out. Can't really complain about your position there, Dillon.
No, I like it. I'm going to keep rolling with it this week. The only other chart, if we want to look at it, and then we can move into my portfolio, would be Uber, because it's at the top. I actually have been trading it for the last few weeks. I have not been assigned on it, so I've been strictly collecting premium, which is nice, right around 0.5%.
Yep.
And what I like about it is, my spread's only $3 on a $75 stock. And at least with the estimated strike right now is 73. So I almost have $3, in breathing room. I'm about $2.30 in breathing room. So I like that. I'm going to keep rolling with Uber again this week. Paying me about $40 in premiums. So I don't know if we didn't look at that chart. We don't need to, but
I mean, Uber has been near the top of the watch list for a while now. It's either been in the lower risk level or the moderate risk level, and when it is in moderate, it's usually at the top of the moderate risk level as well. It is paying out nice premium, right? I mean, if you had to risk $300, which is the max loss here, and by the way, that max loss only happens statistically 10% of the time. If you had to risk $300 for $40 and you knew that only 10% of the time you were going to lose that, $300 and you were going to get that $40, I mean, you could do the math right there. That's why options is great. If you're losing 1 out of every 10, that means you're going to win 9 out of every 10, in some way, shape, or form. So if you do the quick math there, 9 wins on $40 premium, that's $360 minus the 1 loss of $300. That's a $60 net gain. So again, talking about trading over time, let these things play out, give them time. That's why, in PeakBot, we look at things quarterly because, we've got to give the strategies a chance to smooth themselves out and get to that, statistical average of win and loss ratio. So enough about that. Dillon, I'll kick it to you to go through your portfolio.
Yeah, absolutely. So I'll pull up my screen here. Typically those who come in and watch us every week here, I always go back and forth and telling people look, there's 2 types of PeakBot, users or traders, if you will. Those who set it and forget it, right? Because they're picking quality stocks that they're comfortable owning and that they feel good about in the long run. And again, we are not shy in telling people when we look at the data and we share our results and you look at all the information, those who let the bot do its thing, right, who truly choose to set it and forget it here, they typically outperform the individual who's in here making trades and making changes to their portfolio every week. Not always, but the point is when you're in here making changes, you're letting your emotions get involved, and that's not always a bad thing, but it can be, right? I've been assigned on JD. It's in a bearish, could be in a bearish trend. I have a 1% loss on the position. Maybe it continues to go that way. I'm not going to panic and try to get out of that position, sell my shares today or anything like that. I'm just going to keep rolling with it. So JD, I'm going to keep, again, we looked at this on the watch list. If we pull it up, but here's what I like about it. Although it is high risk, and maybe we can speak to this. What do we think made this jump to high risk here? Was it last week? Maybe we were only talking about $100, max loss, or maybe even a $50 max loss. The spread was very, very small. $150 max loss, which is a $1.50 spread on a $25 stock. That's still, for a relatively inexpensive stock, that's a decent amount of movement, $1.50, right? But that's what goes into this risk level, the size of the spread versus the cost of the stock. Is there anything else, fellas, that we would put into that these guys should know, or is it relatively that simple?
It's relatively that simple. I mean, you got to look at exactly what you just said, like a $1.50 to a $25 stock. I mean, that's less than a 10% movement. So,
yeah,
I'd say if anything, this probably just snuck onto the high risk. It probably deserves to be more towards like the moderate risk level.
Yeah, and it's only 1 or 2 away from it, right? So when I say that, I mean, we start here. This is the highest risk just based on the premium being paid, and this is the lowest risk of the high without getting too confusing. But keeping JD, we also looked at Uber. By the way, on JD, I'm going to sell a call credit spread and collect a nice premium this week. For Uber, I don't own the shares, traded a put spread last week, collected my premium. And in fact, if we look at my account here and we look at my trade log for the last week, I made 46.48 last week on Uber, having made $62 with my sold spread and paid back 15 with my bought spread. JD, as you can see, and then with Lyft, I traded 2 spreads on Lyft last week. If we find Lyft on here, I'm rolling. I'm not making any changes to my portfolio this week. So if we take a look at Lyft, we're trading at 1876. I believe I actually owned the shares last week. I sold a call spread on Lyft. They got assigned. They got sold away from me. So I'm now back on the put side of things. Only a $1.50, $1.50 spread here with a $16.50 to $18 range that we're looking at. I'm
Dillon,
rocking.
You're letting your portfolio get a little risky again.
I'm rocking with it. Here's the thing. I'm not going to object to what you just said, but there's also the mentality here of what we kind of say from the beginning. Look, if you feel good about stocks and you are comfortable owning them and you're going to play these for the long run, looking at this data week to week could mess you up, right? It could. It can get in your head. Yeah. To Ben, who I'm in here every week trying to stay back toward 0.5%, maybe up to 1%. To him, he's saying, hey, dude, you're rolling the dice here a little bit. But, if we were to do the traditional thinking of how people should approach, how we like people to approach their PeakBot portfolio, I'm just rocking with Lyft. Yes, this week it's more volatile. Next week it won't be. Maybe it will, But the point is, I like this stock. I plan on trading it throughout the next few months or even the next year. So, yeah, this is a volatile week. I'm rolling the dice on it a little bit. But I'm going to keep sticking to it. I don't want to get my emotions involved. I don't want to say, hey, shit, pardon my language, live show. It's a kid show. But, point
now
is,
we've got to change that setting on YouTube that says it's not kid friendly.
Which all of our content is not technically made for kids. But anyway, so no, you're right. I'm rolling it out a little bit this week, but I like Lyft. I really like that stock, so I'm going to keep trading it. While we're here, just a heads up, these blue columns here, this is obviously the column for the recent or upcoming earnings dates. Okay, we're starting to get into another earnings season here. So if you see a stock that you're trading is highlighted blue here, okay, that means they have an earnings report coming up. Bank of America tomorrow, okay, Morgan Stanley tomorrow. We're getting into this season again here. So we're not telling you not to trade it. We're just telling you to be cautious because the stocks are typically more volatile. They typically pay a higher premium in the week coming
that
up.
Doesn't mean they always pay a higher premium. That's where a lot of people get trapped.
Right.
They'll trade something that's on earnings, see a super high premium, get assigned shares, and then the next week after earnings, no more high premium. And now you're stuck holding 100 shares of a company that you don't even know about.
Yep, you nailed it. So I'm keeping those this week. Now, with my trend spread bot, here's the positions I've been testing on. We got Carvana, which we looked at. Let's find DocuSign on here. We're bullish moderate. This is a sweet spot for me. I dig this. We're trading at 58.90, only a $2.50 spread. Again, I've been rolling this contract for a few weeks, so my strikes and my premiums are going to be a little bit different than what we see on screen here, but rolling with DocuSign. Net and Wayfair. Let's find net on here. Bullish at the top of bullish moderate, just under 1%. What I'm liking is everything I'm trading is still bullish, and that's great for the wheel strategy and even with trend spread, considering we're trading with the trend. And most of them are within my 0.5% to 1% range. Yes, Lyft was outside at 1.22, but yeah, rolling with it this week. So I'm liking everything in my portfolio. The results are showing. My account's been growing pretty steady over the last few weeks. I'll tell you guys, and we haven't been shy about this. Trend spread's been really doing it for us. At least for me, for Thomas, I think we might get into that now and take a look at Thomas's trades on trend spread over the last month. But that's my portfolio for the week. For the first time in a while here on this live show, I'm making no changes at all. And again, that's fantastic. We're not telling you to, it's not financial advice, but we encourage people. Look, that's why we built PeakBot. Save time, eliminate emotion, set it and forget it. So I'm sticking to that this week. You want to show, Thomas, you want to show your trend spread chart?
Yep, just getting it pulled up here now. Oh, I don't have the chart. I have my live account with me.
Yeah,
just so it's a little.
Here are the headlights here.
Thomas unprepared. What else is new?
Look at his head. He's just all over the place. Thomas, you got the spotlight.
I know. Is my screen being shared or no?
No, absolutely not. There.
It's not.
Now we got it.
No, we got it. Okay, I'm looking at my second monitor trying to see it here. And I'm looking back at my screen. Yeah. Okay. So we have the total value here. This account started at $2,700.
When?
So now I'm trading quite a few positions. Back in March 1st, it was at $2,700. Now, April 15th, we're at $4,131.
Wow.
And that's all.
I didn't even know that your account was doing that well.
Yeah, no, it's been going very well. So now I've been trading stocks like Amazon, Alibaba, Google, DraftKings, Occidental. I just got rid of DoorDash last week. I added Intel and Uber. Those are the last two I added on Friday. And I'm glad that they put me in a call spread here. Even though I'm fairly bullish on Intel, everybody else seems to be somewhat bearish. So maybe I'll be wrong for the next week or two. And maybe my other plays will play out as well. So we'll see based on that. But trading quality stocks on trend spread is really going to help you in the long run here, rather than taking risks on those not so well-known stocks, because you only need enough for the spread, right? So to trade Amazon for $500, and then on top of that get paid around $60. Around $60, I think I got paid on it. It's pretty safe. You're just going to roll the contract into the next week, selling the put at 180. Amazon's at 186. Got tons of room to play with. Same thing. Here's Alibaba. Put me into an iron condor this week. So trend spread sees that it'll be neutral, at least for this next upcoming week, after it was pretty much neutral last week. Was previously selling a call credit spread, now transitioning over to an iron condor. So we'll see what happens with that this upcoming week. And that's pretty much it. So the account's been growing pretty well, been doing it with pretty quality stocks, and we'll continue to do the same week over week.
Awesome, man. Love to see the growth from trend spread. With that, again, Thomas mentioned it. If you look at the total value of this account right now, it's at 4,100. And if you look at the number of quality stocks that are being traded in this account alone, Google, Intel, Alibaba, Amazon, PayPal. These are stocks that, with the wheel strategy, you couldn't run this many contracts or spreads on the wheel traditionally with this size account, because you won't have the cash to back it up if in case you get assigned on all these shares. That's the major difference here. So fantastic. Thank you for that update, Thomas. We'll be keeping a close eye on that account. You showed last week on the show a nice equity curve. Maybe we'll post it. We'll keep that going week to week, and we'll share that on socials, and we'll track Thomas's success here. And just for an update, trend spread, we got, 20 beta testers on trend spread, give or take, over the last few weeks. A lot more people are requesting access to it, which we're giving out at the speed in which we're comfortable with, right? We still want to make sure we're crossing our T's, dotting our I's here.
Right.
When should these guys, and we don't need to give a date, we don't want to overpromise, underdeliver. When could the audience expect trend spread to go live, estimated? What are we shooting for?
We've got a development team call tomorrow morning, and we've got that as number 2 on our agenda behind Schwab integration.
Got it.
So we will have a better idea tomorrow. If I had to estimate, if I had to give my wish list, I'd say that, trend spread will be live for everybody by the time we do have our Schwab integration done, which we're aiming for May 10th, because that's the last migration of TD accounts to Schwab. So I'd say mid-May, maybe a month from now.
Cool.
But like Dillon said, if you want to get in on beta and you want to test it out, shoot us a message. I mean, right now, the worst that we're going to say is not this week, right?
Yeah.
Probably next week.
Yep.
So.
Excellent. PeakBot picks competition. I think we should give an update on that. I don't think we've done that yet, unless you guys did it while I was out of town for 30 seconds. I was out.
No, we did not.
Okay. So I'll pull up my screen here in just a second. We'll take a look at the April leaderboard for PeakBot picks. I will say we want some more participation. So when we roll this out for next month, we're hoping that we get even more seats selected. But let me get things pulled up here. So our leader in the clubhouse has 12 points. I know my screen's not up. I'm having trouble. I'll get it up in just a second. So I'll zoom in. Here's our leaderboard update. So we got A Stocks 92, the architect, at 12 points. UNC Tar Pit at 8. We got a tie for third with I Am Lady T and Captain Mike at 6. Jiminy McMurphy and NYC City Hotels tied for 5th at 4 apiece. So just a reminder, get your picks in today by 11 o'clock, 11 a.m. EST. The reason we do that as the cutoff is because that's when the wheel strategy starts entering contracts for you, if you were to be really trading it with PeakBot. Okay, so get that in. You're selecting put contracts from our watch list. Okay, so if you're interested in participating this month or next month, really what you're looking to do is you're pulling information for everything you see here. You're just excluding the call data. We're not worried about that for this contest. So you're finding stocks that you think are trading at a certain price that will stay above their sold put strike at the 30 delta. Okay. So in this instance, if you were to choose Uber this week, you're saying that it's trading at 75.28 and that you believe it's going to stay above 73 when the contract expires on Friday. Again, this is paper trading. You're not actually having to place these trades. If it does stay above 73, you're earning a point. If it drops below 73, you're losing a point. So if we were to just take a look quickly at some of the live picks from last week, we'll just take a quick look and then we'll get into whatever else we need to cover here. But, by the way, we can update our coloring here, but pay no attention to that. If you see red in this column, that means it finished below the sold strike and points were lost. So, a lot of stocks that we were talking about are being selected on here. Intel, Baba, Palantir, Wayfair. So kind of a mix of red and green, honestly, over the last few weeks here. Tough slide.
Week for Haas.
Tough week for Haas, Trader. That's okay. If we look at some of these picks, I don't hate these picks. Just knowing the stocks, just
last week was a weird week.
Yeah, some of them just missed. I mean, DAL here missed by 30 cents. This missed by 11 cents. But it's going to happen. That's what happens here. So, yeah. Who's this? Okay, we got a couple here. Captain Mike. No wonder he's on the leaderboard. He didn't miss, Captain Mike.
Yeah.
So great selections here. Amazon, PayPal, Taiwan Semiconductor, Micron, etc. If you're looking to, get involved.
I mean, the cool thing is you don't actually need to be trading the wheel strategy to participate in this competition. So you could participate just by making picks. You don't need to make any trades. But if you were trading,
oh no,
what?
Okay, sorry, no, nothing.
If you were trading, if you were trading Captain Mike's picks last week, then you would be doing pretty well in your portfolio, I would assume.
Absolutely. So, yeah, that's the leaderboard for PeakBot picks. Again, get involved. We're handing out cash prizes every month. So submit your picks on Twitter with hashtag PeakBotPicks from our watch list. There's the Monday entry today, as well as the Tuesday entry tomorrow. And that's it. What else do we need to cover here, boys? I know we've gone a little long today. Market's going to open here soon.
Yeah, market opens in 18 minutes, 17 minutes. I think we're good. I think we covered it all. Check out our watch list. Keep up on premiums that could be paid out. Start automating today with a 2-week free trial. No credit card needed. Just head over to app.usepeakbot.com, create your PeakBot account, integrate your Tradier account. If you get all that done before 11 a.m. Eastern time, then you're going to get trades on the wheel strategy today. So go ahead, get started. If you have questions during the whole setup process, we got a little chat icon at the bottom right of the screen. You're going to talk to me. You're going to talk to Dillon. You're going to talk to Thomas. One of us will help you get set up and get those trades automated today.
Awesome. Well, great show, team. Thomas, take us out, man.
See you at the peak. Have a
All
good
right.
day.
Don't put that kind of pressure on them.
Enjoy market open. I'm excited.
I wanted to see what would happen. I'll actually close this out. Thomas, I'm going to come to you again next week. You're going to be more prepared with the sign off.
Okay.
Thank you so much, everyone. Happy new trading week. Best of luck out there. See you at the peak.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.